Good afternoon, everybody, and Happy New Year. Welcome to the first FinTech Weekly News Show of 2023. My name is Peter Renton. I am Chairman and Co-founder of Fintech Nexus, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
Doing great. And our first guest back for the, fourth or fifth time, we have the esteemed Ron Shevlin from Cornerstone Advisors. How are you doing, Ron?
Doing great, guys. Thanks a lot for having me. It's an honor and a privilege to be the first guest of the year.
Yes, indeed.
Great to have you back.
Great to have you back as well. So let's get right into it. We've got a lot. It's been a short week, but a busy news week already. And we're going to start it off with TikTok. This was an article that I think it just came out today. TikTok and JP Morgan partnering on payments. This is something that has been going on for a while. There's actually a page on JP Morgan's website touting the case study they've done with TikTok. Obviously, it's somewhat politically fraught right now as TikTok is kind of making waves in Washington with people wanting to ban it. But the reality is, it's a force. I mean, my kids, we have to limit their TikTok time because they love it so much. Users, I didn't realize this, users spent $3.4 billion globally on TikTok in 2022. And what JP Morgan's doing is building real-time payments infrastructure for TikTok. So really interesting stuff. What are your thoughts, Ron?
Great move on the part of Chase, getting themselves into where the volume is. If you think about what's happening, and it's been happening for 10 years in the payment space, you got a lot of innovation, but it's always required user adoption, user change in behavior, sometimes even new technology that needs to be deployed and loaded up on somebody's mobile app and stuff. This is getting right into the stream of things. 3.4 billion was an estimate from one of the firms that Forbes talked to. I can't imagine that won't double in 2023 and more. I think the political issues are just kind of local to the U.S. and got to remember that this is much, much broader than just the U.S. from a Chase perspective. Having said that, on the positive side, I don't think we should get all that excited about $3.4 billion. To you and I, that's a lot of money. Right. But in the payment space, it's a speck and it's nothing. And I think we got to remember that for as popular as TikTok is now, a lot of this social media popularity is very ephemeral. Things go in and out of being popular. Something might come along in the next year or two, and we'll see TikTok usage maybe decline a little bit among certain segments. There's no guarantee in this, but I think it's just a great move on Chase's part.
Mm-hmm. I think it also plays against some of the thinking sometimes that just banks aren't with it. And they're behind, or they're too slow, or they're this. And in the reality, I mean, and we'll talk about this in our next story too, somewhat, is a lot of the banks, especially the Chases of the world, are just as right on the bleeding edge of innovation as anyone else. And being that they are the banks, they have a lot of advantages when it comes with that. And so maybe a fintech that might be playing in this space might be more apt to be impacted by that, the issue that you were talking about, Ron, in terms of fads coming and going. It does show that JP Morgan's looking at new areas, and the banks have a lot more staying power in general when it comes to things like this, and can weather the storm and can jump from these different things a lot easier in some cases. But it does play against some of the banks are just too slow to deal with some of the stuff going on in the market.
Right. And obviously JP Morgan has the biggest technology budget, I think, of any bank, certainly in this country, possibly around the world. But just before we move on, though, I think payments innovation on platforms like TikTok is going to explode. You can already see what's happening in China, where it's like, you can literally click on the product inside a video and it will take you to a payments page where you can pay for it with one click. That's the sort of thing that we're moving towards. And there's, JP Morgan building more of a back end infrastructure to sort of pay creators instantly based on what they produce. But Boy, I think there's a lot. There's a lot more innovation happening in the payment space, and that's going to move on to our next story. Segues perfectly into this is in financial brand, talking about an Accenture study that was all about new payment methods. Accenture say that new payment methods are putting $31 billion of revenue at risk. That's over a 4-year time frame for 2023 to 2026. Basically saying that digital wallets are taking traditional payment revenue away from banks, and digital wallets being Apple Pay, Google Pay, and PayPal being the 3 largest. This was a global study. It wasn't based in the US only. I think they said 13 countries, but really interesting study. And banks certainly, if they just sit in their hands and do nothing, they will see, I think, more of this payment revenue go elsewhere.
I'll go to you first on this one too, Ron.
All right, great. I found that article a bit alarmist, to tell you the truth. First of all, I think a lot of digital wallet activity is simply a matter. It's like our physical wallets. We put our cards in our physical wallets, and basically that's what people are putting into their digital wallets. So I'm not really sure it's putting a lot of the payment at risk unless the wallet is actively in creating behavioral change, and that might be the case in some of the digital wallets, but I don't think it's huge. I think most people are directing it. In the U.S. particularly, I would tell you, I think the much bigger risk to banks' interchange and payment revenue is the government, and specifically the new Durbin regulation will probably have a bigger impact on the banks. So I'm not sure I agree with that. And then, as you guys mentioned, it kind of relates back to the first story. Chase and other banks are not ignorant of these potential changes and are already taking actions to protect, if not increase, their revenue. So I don't know. I'm disputing the Accenture study a little bit, especially from a U.S. perspective, where I'm much more familiar.
I mean, I think that the bigger impact with all these changes in payments is actually more to Visa and MasterCard than anyone else. Because, I think the banks and even in buy now, pay later, where, initially it was fintechs. I mean, banks have jumped into there. I mean, how many banks now have Pay in 4 or Citizens Pay or whatever pay? I think the payments impact is going to eventually eat into, though they still have a dominant space, Visa and MasterCard more than it would be the banks. As you said, I mean, I use Apple Pay, but most of it are through my bank cards in Apple Pay. So it's it's just a different method of using it and a little more convenient without carrying my wallet and my phone. I can just carry my phone.
Yeah, and I think that's actually what we were just down in Australia for Christmas, and it was my wife spent the entire time down there and never used anything to pay other than her phone. Even the guys renting surfboards on the beach had a payment mechanism to pay with by phone. Everyone uses it down there. The risk, I think, is that people, once you get used to using a payment method on a phone, it's just the phone becomes the payment device, and that's, I think, going to happen. But then it's not much of a stretch to sort of, you can add your stable coin in there. I'm talking several years down the track. It's the payment device is your phone, and the wallet. Anything can go into that wallet. I mean, when I went to a Broncos game earlier this year, the ticket was on my wallet. Like plane tickets, you can put anything into this wallet now. So it's becoming more and more important, and because of that, the new payment methods that bypass banks, bypass Visa and MasterCard, can easily just sneak in there and take market share. But we're not there yet, certainly in this country, as Ron said.
I still think we're waiting for most states. I think there's only 3 to have your license in there.
Yep.
Because most people still need their license and their phone or their license and their wallet. Like, once you have the license in there, I think people then completely remove themselves from the physical wallet. But until then, you still need that identification for a lot of things.
Yeah. And that's inevitable. I mean, it's inevitable.
Yeah.
The piece of plastic's going away. Speaking of Visa, though, really interesting article in Tearsheet this week. There was an interview with Kai Sheffield, and we've had him speak many times at our events over the years. The I'm not sure what exactly his title is. Yeah, it's like crypto innovation head or something like that at Visa. Anyway, he was basically talking that, basically shared that Visa is doubling down on crypto. They want to be known as a crypto native company. They want to be the bridge between crypto and the payment space. And so, Visa, like with all of the massive headwinds that crypto had in 2022, Visa is undeterred, it seems.
I mean, this has been, I guess, one of the more interesting parts of what's been going on in crypto the last 6 to 8 months, which is, the visas. And even if you go to, some traditional banks and the Fidelities of the world as well, have kind of doubled down on the blockchain aspect of this. And what that might mean for real-time settlement and changing some of the back end systems of these big corporate machines. And so I think that has been an interesting trend to continue to watch, how they've kind of doubled down on some of this. I still am curious to kind of see where it goes from here, and ultimately how some of the current market issues impact kind of how some of these use cases end up getting there. But it's interesting. I think there's a lot of unknowns still ahead of us.
Yeah, there were some things in that article that just kind of struck me as a little odd, and I wanted to challenge a little bit. And it comes down to terminology a lot. One of the issues I have with the whole term decentralized finance or DeFi is that it isn't decentralized. We're talking about basically blockchain enabled infrastructure. And so when Visa says, and it's not really Visa saying, I think it's the guy being interviewed, the crypto guy, saying, oh, Visa wants to be a crypto native company. I got to believe you've got a couple 100,000 people working at Visa who kind of look at that and go, yeah, I don't think so.
Right.
And it isn't about crypto as much as it is about blockchain.
Right.
And I don't think we should be confusing these terms. Because I think the bigger impact to Visa and MasterCard are probably various countries around the world going to central bank digital currencies versus Bitcoin and Solana and every other flavor of cryptocurrency. So I think the terminology gets important here, and I don't think we should be confusing cryptocurrency with blockchain.
Right.
I think that's what might be going on a little bit here.
Yeah, I think you're dead right. Maybe this is the year that we actually separate out those two terms, because they are used so often interchangeably when clearly someone is not talking about crypto, talking about blockchain technology.
Yep.
And maybe let's hope that we can get there this year.
I'm sure there'll be other terms that just reinvigorate more confusion into this one.
Right. Anyway, I want to move on to an article by Penny Crossman in American Banker, which caught our eye. And everyone talks about the VC funding for women. It's for women-owned companies is just floundering. 2.4% of VC money invested in women-owned startups. That not just fintech, but all startups. The fact that 95% of general partners at VC firms are men. Artemis Fund is focused on women-owned startups. This is what the article was mainly focused on, was talking with founders of Artemis. And, they basically are saying their argument is in a downturn, women-owned startups perform better than men in general, and they're better at working with less money. So let's put more money into female-founded startups.
I mean, hasn't there been study after study, whether it's in the developing world or in the developed economy, that women-owned or women-run or women-led households tend to manage money better than men? And it's still curious that the number is so small. And
Right.
it goes back to, the men that are at the VC firms that are, funding other men versus women. And unless there's a mandate and real change at some of the VC firms, some of these barriers will continue to exist.
Mm-hmm.
Yeah, and this is kind of touchy area to be venturing onto, no pun intended. But for whatever reasons might be causing this, I have to say I don't see it getting better in 2023. not with a cut back in the funding, which I think is going to only lead VCs to kind of get back into what's familiar territory, and may pull back from whatever good intentions many of them have to fund female founded startups. So this, I don't think it's going to get any better. And here's the thing, guys. I'm in market research. I can pull out numbers to support pretty much anything I want to, any point of view that I want to support. I could probably find some data to support it. And reality is that numbers never convince people to change their minds or behave differently. You've got to make an emotional connection. And so I don't care how many studies show that female founded ventures outperform, or that female managed households outperform. None of that stuff is going to change behavior until certain people who are making these decisions really want to do it and see the need for it. It's not the studies that are going to change their minds.
Right. And that's what
that's a good point.
In the article, they're talking about the LPs of these VC funds they're the ones that are, if they want to change the thinking for the VCs, it's got to come from where they're getting their money, which is these wealthy limited partners that are providing tens of millions often of investment capital to these funds. So anyway, let's move on. Talking about Goldman Sachs in the news again. The head of Marcus, Swati Bhatia, has stepped down. She's been with the firm since February of 21, so almost 2 years. I know, Todd, you interviewed her on our keynote stage this year. She was actually, I think it was the most popular keynote of all that we had. She's really well spoken, and she is, Marcus is being basically, I wouldn't say shut down, but certainly it's being really curtailed in its mandate, and so she probably thinks it's become less of an opportunity than what she thought it was going to be when she arrived. So she's moving on.
Sees the writing on the wall with the changes, and figures now's a good time to find her next venture and go. And clearly the changes at Marcus and Goldman have kind of hit what initially we thought would be this potential big deal with Marcus has certainly changed the last 12 months or so.
Yeah, so I'm glad you guys bring this story up, because it's one of those shining example stories that I hate to talk about, because it just shows how wrong I was over the years. when Goldman Sachs launched Marcus, or said they were doing it, my take on this was not going to happen, not going to succeed, goes against the DNA of Goldman Sachs, which is not a retail focused company. But they came out with the savings account. They amassed billions in deposits, hundreds of billions in deposits. Actually, it was even more than that. Did a bang up job with their lending, and I was like, shit, I was wrong on that one. Okay, and then I was like, nope, change my tune. Marcus is a real force in retail banking. It's going to be great. I was wrong, and now they've totally bailed out.
Stuck to your guns.
Totally not surprised that Ms. Bhatia would leave. You're right. She saw the handwriting. There's no organizational support in there. So maybe I was actually right at the beginning of all of this, that it was just not in their DNA to really kind of focus on the retail market. And I think that's what's kind of, they're kind of bailing out, but they're not bailing on the Apple partnership. So I still think we may see some, embedded finance type of focus from them. But in terms of kind of direct to consumer, that really does appear to be dead from a retail banking perspective.
Yeah, and they may still keep their deposits going, but like the personal loans apparently are shutting down completely, which they were. I mean, they're still. I was just looking last month. They were still actively on Credit Karma and Lending Tree or whatever.
I was still getting emails from them a few weeks ago.
Right.
So
yes, they would. So maybe I don't know what the timing is on that shutdown, whether it's happened already or whether it's about to. I know the Goldman Sachs are going to announce layoffs later this month, I believe. So Interesting times inside Goldman. Okay, so moving on, this week there's all these stories about what's happening in 2023, and of course we did our own. We interviewed a number of different people, and what I want to do here is just hit some of the. There was I think we interviewed like 10 people, and some of the things came up multiple times. A lot of things about payments innovation, embedded finance, becoming even bigger. Venture capital money is going to come back. I think that might be wishful thinking. More fintechs will offer credit products. We got BNPL moving more into the business to business area. Consumer permission data is an open finance is going to be becoming big. So those are some of the things that we had. Ron, I want to put you on the spot and think: are there others, or are there some within that you think are going to be particularly important this year?
Yeah, I think in the retail banking world, I think we're going to see a lot more interest in adoption and deployment of chat bots and, in general, conversational AI. I think there's been I do an annual report called What's Going On in Banking, and I continue to see the growth year over year. But I think the whole buzz around Chat GPT at the end of 2022 really kind of brought a lot of awareness around what these capabilities are to a lot of banking execs. And I think the recognition that, well, if I mention chatbots to somebody and I sound positive about it, I usually get like, Ron, don't you use these things and know how bad they are? And like, yes, I do. But you got to understand, chatbots kind of like baby step in the world of conversational AI.
Yep.
And there are a lot more use cases than just sticking them in for tier 0 support. A lot of internal usage, a lot of use cases for this. And I think we're going to see, it may not make front page news with a lot of stuff. I think we're going to start to see a lot more conversational AI deployment in the retail banking and commercial banking world.
Yep. And I tell you what, Chat GPT, the technology behind that is phenomenal. I was playing with it with my kids with it over the holidays, and typed in one of their assignments, and what it came up with was just fantastic. And both my kids, that's better than what I would have done. And it's that's obviously not fintech, but it speaks to the capabilities of this technology. And I think, as you say, Ron, I agree. I think it's going to be huge. It's going to be huge. Anyway, we're going to end with a few stories on crypto. There's been, crypto led our news for so much of the last couple of months of the year because of the whole FTX debacle, and that does continue, of course. But we're going to talk about Silvergate. This is the bank that went all in on crypto, and they have had some challenging times, shall we say. Today, their stock is down 43% as word got out that they've had a huge number of withdrawals, $8.1 billion of withdrawals. And this is withdrawals from a bank. This is not like there's a bank. This is an FDIC insured bank. And so there's been a run on this particular bank, and they've had to sell all sorts of things to cover it. The stock is down 85% over the last 3 months. They just announced a layoff of 40% of their staff. It's ugly times out there for Silvergate.
Yeah, I know. The funny thing about them is like they seem hell-bent on not giving up this.
Yep.
So focused on crypto strategy. It's like you made a mistake here, clearly. Some stuff out of your control with other exchanges and whatnot, but it was always a risky asset. It's not like it was the safe haven that people were jumping to.
Right.
So, and it just seems like they're so hell-bent on staying the course that it ultimately could kill the bank when they could easily, dial it back and begin to, kind of stabilize what they're doing. But, for some reason, they're just like, nope, we're going to stay the course while they fire half their people. And it's confounding to watch how headstrong they continue to be.
Yeah, Todd, I totally agree with you. But I got to tell you, I think you've got to place some degree of blame and accountability on this to the regulators. As you said, Peter, they are a bank. They are a chartered bank. And for the regulators, to not kind of recognize the correlation between the interest rate risk and the crypto risk, and just to not see these risk factors ahead of time. You're right, Todd. They were hell bent on it, but the regulators should have been giving them a much harder time about this right from the start.
That's a good point.
Yep. Okay, moving on to the mandatory FTX stories. We have Sam Bankman-Fried. Not much really to talk about here, other than the fact that he did plead not guilty in the New York City case that he for all the fraud that potentially happened inside FTX. I don't know if we need to really discuss that, but the other thing I think was interesting is that.
Wait, before you go to the next one, before
Okay.
you leave, Sam Bankman-Fried, if no one else has coined this term yet, can we start to refer to him as a crypto klepto?
I think we can.
I look forward to reading that in one of your articles, Ron. That's great. You can
hashtag crypto klepto.
There you go. Okay, so speaking of which, the Southern District of New York, which is bringing these cases against SBF, they have launched an FTX task force. What they're trying to do is get back, the billions of dollars of FTX customer funds. People think, oh, I'm going to buy Bitcoin on FTX, and not realizing that they're actually just providing an unsecured loan to FTX to use whatever they wanted to do with. And so they're trying to get back some of that money. Be interesting to see what their progress is like, because a lot of it, as we know, are in very illiquid investments.
Yeah, quick prediction. Like 3, maybe 4 years from now, someone's going to make a movie about this. And I don't mean the Sam Bankman fraud stuff. I mean the what the Southern District of New York is doing. Just the forensic, aspect of this is going to make a fascinating story of how to, follow. It's not a paper trail, but the digital trail is a fascinating story in and of itself.
Yeah,
I think, didn't Netflix do something? I think it was called Worth on the Madoff. I think it was similar. They did a movie on kind of the person that was responsible for trying to claw back or find the funds through Madoff and try to make as many customers whole as possible.
Right.
Yeah.
Well, don't forget we have Michael Lewis, who apparently spent close to 6 months with SBF prior to all this happening. So that guy knows how to write a story and a movie script. And so there is that. It's not going to be out imminently, because it usually takes months and months to write this. But I expect a book by Michael Lewis this year about SBF. That will be an interesting one. Anyway, finally, Coinbase. So Coinbase were fined $50 million by the New York Department of Financial Services this week. It was a settlement that included a $50 million fine and a commitment by Coinbase to add $50 million to their compliance efforts, because they really have been, they were lax in background checks during account openings, and they basically were violating AML standards, and so they need to get that fixed. So anyway, interesting. Interesting. More bad news. This is unrelated, nothing to do with FTX. This is Coinbase not having their ducks in a row.
Yeah.
Well, this goes to show you guys that 2023 is truly going to be the revenge of the nerds, in particular the compliance nerds. It's going to be a year of compliance. So unsexy, but man, it's going to be the hot story of the year.
Yep, yeah. Agreed.
Yeah. Okay, well, we're going to have to leave it there. Ron, thank you so much as always.
Thanks, guys.
For the show.
Thanks, Ron.
Happy New Year to everybody. Thank you very much for all the listeners and viewers out there. We're going to be back same time next week, as we will be every week now in 2023. And have a great weekend, everybody. Thanks very much.